Derivatives are a funny subject because the average person doesn't understand them. The average person in the financial industry doesn't understand them. Only the people who created them actually understand them. When a company is able to create $60 trillion in derivatives out of thin air, essentially, you know that we have really made a big mistake. You came here for the truth, so let me unveil that for you. Today we're going to look at derivatives, we'll look at debt and the monetary system, stocks, and so much more. Let's begin. This here are the derivatives of one particular company, and that is none other than Deutsche Bank. If you look at the bottom of the screen, this is in euro. You will see their derivatives total up to 48 trillion euro. And if you convert that into US dollar, it's nearly $60 trillion. Now, $60 trillion is a very large number, and you have to think, what institution, what organization, supranational entity or government could ever bail this out? The answer is, of course, none. If there is a company that is too big to fail, this is the one. Imagine trying to unwind $60 trillion worth of derivatives. It is simply impossible. The entire financial system would fold like an accordion. It would be toppled so fast. So of course, they're going to keep it alive for the foreseeable future. But look at their stock. It has been, since the financial crisis, if I just add this in, it's been on this downward trajectory. You can see over these past few years that we have seen a decline in the stocks. Deutsche Bank, it's been suffering. You can look at European banks. In fact, banks in general aren't doing really too good at this time. There's much to say about that. Some of these banks, they can split them up, they can take their assets, they can have one buy out the other, and so on. Some of them are simply too big to fail. They cannot be allowed to fail because that would completely evaporate the entire financial system in a very short period of time. Deutsche Bank has been asked by the ECB supervisors to calculate the potential costs of winding down its investment banking operations. Well, what would this entail? The reason they're telling them to do this, clearly, is because they can see where this is all heading. They know that as time goes on, Deutsche Bank becomes more of a risk. And so they want them to scale back on that risk. Sure, don't talk about the $60 trillion and, you could play around with that. Don't worry about it. But of course, nothing could ever bail it out. It's funny that, for example, in the US, you have the FDIC. Insurance on your bank account. If something ever happened to the bank, they would help you out. But of course, if one bank actually failed, there isn't enough money in that insurance to actually backstop the loss. That's ultimately the failure that we are not seeing because people say, no, it's insured. Nothing could be further from the truth. One of the big issues that I'm seeing today is seemingly taboo to discuss it, but I will. Since the financial crisis, the amount of margin that is being used in stocks right now is ridiculous. It is so reckless. I don't care how many people are involved in it. If you are, do whatever you think is right. But this right here makes a smaller crash feel like a much bigger crash. It will happen very, very quickly because of margin. That's what I'm trying to get at. So whether you might see a little bit of weakness that might, let's say this was supposed to be 15-20%, because of margin, it's going to be brought down much further. Those margin calls will come very quickly and they will destroy a lot of people. Previously, we had very famous instances. 1929, a drawdown of 86.2%. I've seen numbers of 89% regardless. Looking at this down here, 2007 to 2009, you will see this 57%. So when you can see a 57% drawdown, think about it. Everybody seems today to be relatively okay. Everything during that time frame was uncertain, but ultimately we have retraced our steps in the equity market in the US, and that 57% has been regained and surpassed. So what do? Do we simply not worry about what could happen? If we were to see a 57% drop in the stock market today, it would be 100 times worse than it was back during the financial crisis. Because there have been no protections put in place to ensure that these investment companies don't get too big. The derivatives exposures are absolutely ridiculous. And if the market comes down just a little bit, it's going to have a significant effect. 57%, we don't even have to go there because of what's happening today. This right here, I just wanted to mention it very quickly. S&P 500 divided by the price of gold. We always look to measure everything in the US dollar. Why? Because it's the reserve currency of the world as of this time. But when you measure something in something else, you tend to get a different picture. I got this from Mike Maloney's book. I got this from, if I'm not mistaken, The Dollar Crisis also. I believe the gentleman's name is Duncan. Last name is Duncan. And pricing one thing in something else is a fantastic way to really be able to wrap the idea around your head that you don't need to measure everything in the US dollar. And in fact, when all currencies are sliding down, is that a good measure of something? You can measure gold in the S&P, you can measure gold against silver, you can look at hundreds of different ratios that exist. And it's very telling. There are certain ratios that are present historically, particularly in this case, S&P and gold. So be aware that that could be the case anyway, that you would want to keep an eye on it. I'm not going to get into any details about this, but just wanted to show you the chart and make some points. This is no longer the FAANG stocks. We are looking at the FAANG, the FAANG stocks, versus the S&P 500 sales growth. Top 5 stocks forecast to grow sales 5 times the rest of the S&P. .com boom 2.0. We're just looking for the bust. Look at this. We can separate all of these here. Looking at them all together, this instance. And then the S&P 500 excluding these stocks makes a huge difference. Truly. Huge difference. And especially when, this is Goldman Sachs, by the way, especially when you factor in their forward estimates. These stocks have outperformed everything, it seems like. Their market cap is gigantic. Over, like, percentage-wise, you have to really think about that. How these stocks here, they are the ones that are getting the most investment. They are getting the ones that get the most attention in the media, and ultimately can be quite volatile, as you have seen with Facebook recently. The new communication services sector. Google and Facebook will not be part of the technology sector as of September 2018. Can you believe that? They're moving from IT over to the communications services. Also to be joined with Verizon and AT&T, Netflix, Disney, and others. I thought that was quite interesting. It's going to change a lot. Growth and value of the largest current and legacy info tech stocks. Down at the bottom there, you can see what they're trying to highlight. Current 25% of the S&P. Make some changes. And right here, Alphabet and Facebook in the communication sector. I won't get into any more details here. Just wanted to lastly mention this. Geopolitical risk has increased dramatically. What you can expect is for volatility to pick up. You will also have more uncertainty. You may have gold, which rises depending on what happens here. I'm not going to say the words, you know what I mean. As there is more uncertainty, you have volatility rising, you have gold rising, and you have ultimately a self-fulfilling prophecy, because that just continues going more and more and more and more until it feels the ease. What exactly it's going to feel that ease from, we don't really know. We heard the president saying, mission accomplished, and then the stock market started to rise. I know it's a joke, but anyway, that's the world we live in. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel, so I do appreciate that very much. Of course, you have to hit that subscribe button. There are over 100,000 subscribers on this channel, and I want to say hello to each and every one of you, whether you've been here first video or since 2011. I want to say hello to all of you. Now, if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through the books at Amazon. There will be links in the description of this video. You can click there, go over to Amazon, flip through the pages for yourself. Take care.